What if I told you the difference between profitable traders and losing traders isn't about having secret indicators or inside information? It's about having the right numbers. Today, what I'm going to do is show you exactly how successful traders know their numbers before they even place a trade. Welcome back to the Financial Traders Cafe. I'm Adam Collingwood, and in today's video, I'm going to demonstrate how our trading risk management and strategy analyzer can transform your trading from guesswork to a precise, profitable system. You'll see exactly how changing just one parameter in your trading approach could double or even triple your monthly returns. Think about that. So in the next 10 minutes or so, what you'll discover is why most traders fail despite having winning strategies, how to calculate your perfect position size for consistent growth. We'll look at the exact risk-reward ratio that fits your trading style and the win rate that you need, and how to know if your current strategy can actually reach your financial goals. So let's get into this, and I will show you a live example of how this works. So why is it then that most traders fail challenges and they blow up trading accounts, despite thinking that they've got a winning strategy? It's about consistency. They just don't have a formula to follow, so the results just end up being haphazard. So we're going to get into a calculator. I've got a suite of trading calculators. This one's called the Trading Risk Management Calculator. And what we're going to do, start with, I don't know, £2,000 trading account. So just 2,000. So how could you get from 2,000 to 10,000? We'll have a look at how you could compound that up as well over a period of time. So what you've got to start with really is, what is it you're trying to achieve each month? What do you think is realistic? Do you think you could make 10%? Do you think you can make 7%, 8% in the month? Okay, I'm going to leave this defaulted here to 10%. So you all need to get 10% is £200 for the month. I love breaking things down. So you've got a weekly target here of £55.56, a daily target £11.11, and what you just need to make per trade is a nice, easy £3.70. So just breaking down these numbers makes it so much more achievable. Now, what about the trading days? How many days are you going to trade in the month? Now, let's just say you're going to trade for 20 days in a month, and you're going to trade on average 3 times a day, okay? Sometimes that might change. Some days you might just trade for 1 day. Other days you might even have 4 trades set up, but we've got to have a starting point here. So on average, 3 trades per day, all right? Now, what we're going to do is we're going to have a look at how much you're going to risk per trade. So let's just say you're going to risk. So we're going to put this at 0.5. And you should really know what your risk-reward ratio is, but this is what we want to look at in this video. So if your risk-reward ratio on average is 1.8, I've got a little trading journal in here where we can just put those numbers in, and that will tell you what your average is. But if you do know it, then we just put that in here. So let's just say you came to me and you said, Adam, I'm risking about 0.5% on each trade. I'm getting on average 1.8 to 1 reward for the risk that I'm taking. And I just want to make sure that I'm doing that all the time. Now, what happens, right? And this is the magic here. What happens is people, they'll place trades. They think they've got an absolute beauty and a winning strategy that is going to keep them on a winning streak, but it doesn't work like that. If you've been trading for a while, you're going to some days have trades that just lose, and you think, oh God, is it the strategy? Is it not working? Have I back tested it enough? Maybe there's a better strategy. Perhaps I should be doing this strategy or that strategy. And they're just hopping around, so there's no consistency, no certainty. So once you know that your strategy does work, you've got to expect sometimes you could have some losing streaks. Sometimes they could be 3 in a row. Sometimes they could even be 7 days in a row. I do have a trading drawdown calculator that works all that ahead. Are your drawdowns affected? So you should know how drawdown can impact a trading account and how that can potentially really affect you psychologically. And as I say, that's where that doubt kicks in. You think the strategy doesn't work, and then you move on to another one. And you just end up never making any money trading. Supposedly, I think the statistics at the moment, 85% of traders don't make any money. That's the realism behind this. And most that do trading challenges just don't pass the trading challenges. So they're just wasting money, blowing up personal trading accounts. And they'll either keep at it or just keep trying new strategies and eventually just give up. But there is a better way. There is a better way, and this is all about certainty, precision trading, knowing the numbers. You've got to know the numbers. So if you do those 60 trades in a month, so that's 20 trading days. So for you swing traders out there, you might only want 10 trading days in a month and maybe only one trade on each one. And this works perfectly to do the calculations for that as well. But we're going to assume here that you're day trading, so 60 trades. Look at how many winning trades that you need, just 29 out of 60 winning trades. That's all you need to hit your 10% target. So that's 47.6%. 47.6% is all you need to hit your 10%. All right. What about 15%? So let's just change this to 15. Now, can you see? If you just increase your win rate to 53.6% and you're applying the same strategy, you would need 32 out of 60 winning trades. But you get that, and you've hit 15% for the month. We've not changed anything else down here. Risk-reward ratios, it's all the same. What about 20%? What would you need to do to get 20% for the month? You need almost a 60% win rate. So that's 36 winning trades out of 60 trades for that month. Okay, nothing changes at all here. So you would have 24 losing trades of £10 per trade, and you'd have 36 winning trades, and your reward on those 36 winning trades is £18. You do 36 times 18, that's your profit, less the 24 times £10, that's your loss. Okay, what we can also do is we can have a look at how this compounds up as well over a period of time. So if we went to the trading strategy analyzer, let's put this back to 10. We're going to go back to 10% really, so that's a realistic number. So on the trading strategy analyzer, which is another calculator that I built, it worked differently here. Look at the magic in this one. Okay, so your risk per trade, you said was 0.5%. And we're going to say your win rate is 48%. Okay, we're going to leave that 1.8 to 1 risk reward, 60 trades per month, which we just said before in the risk management calculator. Now, let's just say over 6 months, you started really killing this. You started to hit those numbers. Over a 6-month period, look how much your account would grow by. So at the end of the 6 months, you'd have gone from 2,000 to 3,661. What about over 12 months? Your account balance would be up to 6,700. You can see how that's increasing. The reason with it increases is from month to month is that every time you're hitting your target, what you're doing is you're able to put on more per trade. So initially you're risking £10 per trade, £12.23 per trade in month 4. Month 5, you're risking £14.96. So this is just really tiny numbers for anybody who's just really started trading and you've got a couple of £1,000. You're not going to be jumping up and down and say, oh, my 2,000 is now worth £6,000 or whatever. But if you get this right on this small balance, can you imagine when you really start scaling up to the much bigger numbers? So even in 6 months, just hitting this target with a 48% win rate, your monthly return would be 19.6%. Can you imagine that? Let's just say you thought, no, actually, I want to risk a bit more on my account. I feel comfortable on that 2,000 that I'm going to risk 1%. Okay, so you're going to risk 1%. Look at the difference from risking 0.5% to 1% over this period of time. So we're going to put this at over 12 months. Okay, your account balance would be worth 20,094. 20,094 just from 2,000. Okay, what about over 6 months? What would that look like? Your 2,000 would be up to, let's just have a look, 6,339 over that 6-month period. But because of the compounding effect of this, look at this, 36.2% would be your monthly return. Risking 1% per trade, look at your win rate. Your win rate is just 48%. So it's less than 50-50. So wins 174, losses 186. All right. It's just magic when you know the numbers. It takes all the weight off your shoulders. You're not rushing anything. You know that if you really have got your strategy dialed in, that you can start to hit these kind of numbers. All right. And that's just with a 2,000 account. Can you imagine if you've got a 10,000 account? Look at that. 217% would be your compounded return over a period of 6 months if you were able to hit 48% win rate on a 1.8 to 1 risk reward ratio. What about over 12 months? Look at this. So your 10,000 over 12 months could be worth 100,469. So that's 720 total trades over that period of time, which is 60 trades a month times 12, 720, 348 wins, but still 372 losses over that 12-month period. As long as you're hitting an average of 1.8 to 1 risk reward, then you're absolutely killing it. That's the trading strategy analyzer. What about going back to the risk management one? When you're putting in every trade, when you're going through all the trades that you're making, it will calculate your average risk reward ratio. In this case, it's 2.12. So then you would go back and say, okay, risk calculator 2.12. We've only got in here 1.8. So let's go back to the trading journal, put in those numbers in. Let's just say you're trading the DAX and you see a nice little setup. And let's say it is 24,002 is what your entry price is. And let's just say on this one, you're going to go long on that particular trade. And you looked at the chart and you can see that 23,974 is your stop loss. Then where's the target price? Where is the target price? Now, if we think that the target price on there, it's a previous swing high, and we want to put the stop loss in at 24,089. All right. 24,089. Okay. So if that were the case, you're going for 87 pips. 87 pips there. You're risking 28 pips, which is the difference between the stop loss and the entry price. So your risk reward ratio here would be 3.11 to 1. Okay. So what you could do here is you could have 2 target points. You say, okay, my average risk reward is 2.12, but what I'm going to do is I know that the price could get back to that previous swing high, but if it doesn't, I don't want to see the profit start to evaporate. So what you might do is you might just lower the take profit. See this, how this changes the risk reward ratio, and you bring that back to say 2.11. Could even bring it back to what we looked at before, 1.8. That's all at 1.82. So then you know that the target here, your TP, is only 24,053. So you need to make 51 pips there. So what you do is, so you're buying at 24,002, stop loss 23,974, and then once the price gets to 24,053, move your stop loss up. Okay, this is how to achieve these targets, what your risk reward ratio is. So you know you need to get to 24,053, and then once that happens, you move your stop loss up from 23,974 up to 24,053. You've locked in that guaranteed 1.82 RR. And then if it does go on to hit the level that you initially thought that it might get to up here, 3.04, you could then just leave the trade to run and then have a take profit target. You just open the trade up, change the take profit to 24087. You already know that you've changed that stop loss, okay? And then if it hits that, you've then achieved a 3.04. This is how to manage the trade. So the worst case scenario is you've got a winning trade there, it's hit its target, and fantastic. And then afterwards, once the trade has actually happened, you've got this open on this calculator, and what you do is you click add to journal, and there it is, it's in there. Okay, so your average risk reward ratio on that trade was 2.04 to 1. So that's kept your average risk reward ratio at 2.12. All right, that's how to really understand the numbers. You're not trading on hope anymore. You've got a track to run on. You have a proper trading plan in place. You know those exact numbers. You're not rushing anything. You're in the trade. You know when to close the trade because you've literally got a plan of action. And if you do that, okay, then you're going to hit these big numbers very quickly. Very quickly. All right. I hope you enjoyed this video. I love making them. I love numbers. I created all of these calculators. So you've got the magic number calculator, which is your longer term plan. You've got the drawdown calculator here. You've got the trading strategy analyzer. You've got a position size calculator. Even people who are earning an income, I create all sorts of different things so you can see how much tax you pay on your income, what you can put away each month. All of this, it's all part of financial planning and getting you to where you want to get to. So you have a starting point. This is your GPS to guide you to where you're trying to get to. You can do this with precision, control, organization, and you'll just absolutely love it. I'm going to leave a link in the description below. So if you do want these calculators, then click on the link below. If you want to have a chat, you can book a coaching call with me in here. And if you like the video, then press the like button, always helps. I think with the algorithms or something, I don't really know too much about how YouTube works with those, but anyway, it always helps. And I do welcome comments. If you like this, if you don't like this, what you're doing, what your risk reward ratio is at the moment, what your win rates are. Yeah, I'm always very interested to know that. And I will make another video. I'll just keep making videos on this because I love them. It took me months to build all the calculators because it's just so powerful. It will save you so much money in blowing up all your personal trading accounts, and the cost to keep trying to pass these trading challenges, failing one after another. You know, how it all adds up. They make money and you don't because they know you want to pass the challenge. This is how you pass the challenge. Anyway, I'll speak to you soon, and you take care now, and happy trading.